So this is me going short on the micro E-mini S&P with one contract. As you can see, price is trading up and I'm slowly adding, so now I've got 3 contracts on. That's me finding out the 50% level with that Fibonacci just there, and that's me showing the executions. So I've sold short. This is on a live brokerage account, and I'm targeting this sell side liquidity. As we can see, that's a 15-minute fair value gap. I want to see us trade through that, and it needs to become inverted. So that 50% level right there, I'm not going to be adding any more size after we break below that. So we've got 4 contracts on at the moment, and I believe just before we break through, I add one more and take that to 5 micros. So after a close below here, stop moves in, and when we wick up into that one more time, I add one more contract. So that was the last micro added, and the sell side liquidity is resting just below. So I want to take a partial there. So at the moment, price is doing everything I need it to do, so I'm pretty happy up to now. And I can see we're just sort of fluctuating in that 15-minute fair value gap, and I like how it's reacted off the new week open gap high. So far so good. I'm not really concerned about anything up to this point. And I can see now we're starting to trade a bit lower. I took that one contract off there because I wanted to see a bit of aggression in there. We sort of start to consolidate a little bit in a moment, but that little wick down there, I wanted to see it trade down into that. I wanted to see it start traveling. It didn't do that. It sort of started hanging around a bit more. So when price sort of starts to do things like that, I just sort of become a bit more reserved. I moved the stop in a little bit, and we're just sort of hanging around that. So right now I'm thinking, all right, it's been trending up, so we've traded just below 50%, so this is basically a 62% retracement level. So there is a potential that we could go and trade higher from this point. And as we see it start to wick down from here, again, it's done that a few times. So this is sort of telling me it's reacting from an imbalance on probably the 5-minute time frame or the higher time frame, and it could potentially trade back up. So as you can see here, I've said ideally I don't want to see it return above that 15-minute inversion fair value gap. So as you can see, I've closed out there, and there's my executions for that because I didn't like how price was. I didn't like how price was moving, and this is part 2. So price traded up into that inversion fair value gap, and then I could see it broke down again. So I've sold short, targeting that sell side liquidity below. Okay, so I got out early, saw we reacted from that inversion fair value gap. I saw us drop off, and in that order block inside of the fair value gap is where I sold short, and then I'm targeting the previous day's low. So we got that liquidity resting just below around 4334, and I had my target just below that on this second re-entry because I wanted to see it stab straight through the liquidity and into the previous day low. We've already broken the previous day low today, so I wanted to see us return back there. So I did also take a little long with one micro when we had this what looked like a market structure shift, and after this breakdown I'm going to talk through all of that as well. But overall, I'm pretty happy with today's performance, and we've taken that liquidity just now. And yeah, it was playing around with me a little bit today when we had that run back up into the inversion fair value gap. So she was playing around, and experience says close it just before your profit target, because the amount of times I've been in trades and it's reacted like 1 pip away from my target, and yeah, obviously in that case it went a little bit beyond that, but I'm not too concerned, and these are all the executions. Alright guys, so obviously you just watched the video that was speeded up, so I'm just going to talk through this very quickly. So I sold short up here, took those partials down here as shown in the video, and then I saw what I thought looked like a bullish market structure shift. So I bought one contract there at 4345, just above here, as we was breaking out of this 15-minute inversion fair value gap. So my thought process was, okay, what I'm reading in price, I didn't really like this consolidation too much, and I thought, alright, if we're going up, we're likely gonna take out these highs up here and trade into this blue line, which is consequent encouragement of this 1 hour order block just up here. So let me take these executions off for a second. So midpoint of this, I thought, okay, we'll likely we could trade up into that. So that was the thought process when I saw price failing to go lower, especially after these lows here when we had this shift up here. I thought this may act as a breakaway gap just in here, because we had this order block and then we traded through this inversion. So I tried to go long on this here, but all it was doing was to trade back up into this inversion fair value gap where I originally went short from, to take out people that moved in their stops too soon. So the markets have been moving very, very funky this week, obviously because of all the things going on. So I was in the mindset of, okay, I need to be making decisions quickly, because this could have run for those highs up there, because the market structure down here was giving that signal. On the 5-minute, one of the reasons I took that little tiny long was because we traded above this order block in here. So on this blue candle, we took out those highs, and if I was bearish, I wanted to see these up close candles be respected. Okay, so when we traded through that, that was another reason why I thought, alright, we could take out those highs. If we just zoom out a little bit as well, we can see that it has been sort of trending up. So yeah, that was that thought process. And then the moment I saw us break back down, the moment I saw us do that, you see me take the short. So I'll just put the executions back up. You see me take the short from here in this gap and riding it down into that sell side liquidity we originally had targeted and that previous day low. Okay, so this run up was designed to trick a lot of people. It didn't quite get me, but I had to make a lot of decisions very, very quickly, and that's one of the things you got to do on these lower time frames. And if you're sort of trading like this and you're reading price to that sort of precision, then you're gonna take like little losses here and there, but overall we can see that from the executions and the profit, which I'm going to show, is overall in profit. So I'm pretty happy with that performance. Yeah, I could have held on prior to this move. It's normal for the markets to do things like that from time to time, but the way I trade, I'm protecting like my capital and risk as much as I can. So I'm following price. I'm sort of doing what I'm seeing in the charts. So hence that little buy in there. So just to break this down again very, very quickly, sold short up to 5 contracts in here, bought it back just below here, and then tried to go long after I saw that we was struggling to take out this wick, and then we had what looks like a market structure shift in there, but it was just trading up into this inversion fair value gap. And then once I saw that broke down, the time that sort of broke down was 10:15 New York time, and then it gave a nice opportunity to sell short from a gap below this 15-minute inversion fair value gap. So when I saw that we broke back down, I thought, all right, yeah, we're gonna run for those lows. especially because we've got that 15-minute inversion fair value gap, which is from a higher time frame, and we've obviously got the new week open gap as well. So we traded straight up into that new week open gap high. That was Friday the 6th, Sunday the 8th of October. Sorry, that's not that one. Actually, yeah, it is. I'm not too sure which line this is because I've not got the date written on it, but it's one of these two. And yeah, that was the short down there, and then obviously bought back those last two contracts in here, and now you can see price consolidating at the previous day low. So yeah, that's it for the morning session, and I'm just going to show the overall profit. Obviously I'm just trading micros, as you can see in the top left corner, so hence why you're not seeing crazy returns, but that's just something I'm doing on my personal account at the moment. Main reason being, a lot of people think that they just want to get rich quick in this industry, and I've been doing this for a couple years now, and yeah, using low leverage, like the lowest form of leverage, and being consistent with that is still a great way to get ahead. And yeah, it takes time where I'm at in my journey to be moving up into those bigger contracts, because there's a big step from obviously trading micros into those bigger numbers. And I've found, like, as I'm sort of trading micros, I'm a lot less stressed on the charts. I notice I can get into positions a lot better without sort of thinking, is it gonna sort of come for my stop, all that kind of stuff. And it just generally removes like a lot of anxieties when you're using less leverage, and you can focus better on the charts as well. Because if you're trading over leveraging, and you may think you're not over leveraging, but you may actually, be risking too much for what you can take sort of mentally for where you're currently at in your own financial situation and all those kind of things. It will have a big impact on the charts. And if you've got like that kind of leverage on the trade, you're not looking at the candlesticks, you're not watching price, and it will be just a big distraction. So maybe if you're having like trouble with some of your trades, just try lowering your leverage, maybe increasing the distance between your entry price and your stop, and see if you do any better. Because a lot of the time, if we're using like higher leverage, we're trying to suffocate the trade by having really tight stops and all that kind of stuff. So yeah, just something to think about. But yeah, these are all the executions on a live account, and I'm going to show the profit now. Yeah, so there's the profit, $150, and that's just trading micros. So I think it's something on the E-mini. I believe it's like $5 per handle. Yeah, around $5 per handle. And yeah, so when you add it up like that, it's pretty decent. I mean, obviously, if that was on like one mini contract or a few mini contracts, then you're kind of talking ridiculous returns with that. So yeah, that's the business. And yeah, I hope that was insightful, and I'll see you in my next video. Thanks.